goes right back to the very simple principle that I shared earlier is affordability. If it's too expensive to be living in Vancouver, people start to move outside. They don't necessarily want to leave Vancouver. They may want to move to Chilliwack. So Chilliwack would be a hotspot for me. Abbotsford would be a hotspot.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadden, and I'm your host. I can't wait to get you into the flow.
What are the investment trends in the real estate market? What's happening? Where are people going? Where are people losing money? And where should you stick your money if you still believe that real estate is the place to go? For all of you real estate investment haters, listen in. For all of you people who are interested in getting into real estate investment, definitely listen in. Today's podcast guest is Mike Ponte. I've known Mike for a number of years. He's been investing in real estate, I found out, for over 20 years. He owns a real estate investing education company. He invests in real estate himself, and he's just genuinely a really freaking nice guy. But the key thing with Mike is because he talks to so many different people, he's very good at articulating how to do things and the different opportunities that present themselves today. You're not going to want to miss this episode with Mike Ponte. Trust me when I say this, he's got gold in the actual episode itself. Oh, by the way, if you're loving the content that we're posting, do me a favor, hit that like button on YouTube. If you're listening to the podcast, please give us a rating on Spotify or iTunes and shout us out. Share it out with a friend.
Anyways, we'll talk about pugs for a while, but we'll get into the show. Mike, thank you very much for joining us. First time on this podcast.
Very honored to be here. I was so excited. First opportunity, Flow Mortgages podcast. I'm just excited. So thanks for having me. I really appreciate it. New year. Very excited.
Yeah.
So, right? So.
Yes. If you're listening, you can't see it, but Mike is definitely excited. And I'm grateful to bring that. I got caffeine, so I'll be very excited in about 5 minutes.
Yeah.
We'll get there, man. But yeah, thank you for joining us. And we've got new listeners now, so we definitely have to introduce who the heck is this Mike guy that's on the show. You and I have done, I think, 3 podcasts in the past, tons of content together for your community. We created courses. So you and I are very familiar, but since they're not, give me a quick once-over. I'll do some intros, but tell me a once-over. Who is Mr. Ponte?
Sounds good. No, great. Thanks for the opportunity again, guys. And Alex, appreciate that. So Mike Ponte, I'm a longtime Canadian real estate investor. I've been investing for roughly around 22 years. Oh my God, it's actually almost 23 years now. I'm just thinking about it. But kind of investing all over the country, to be frank, and been investing both in single-family and multifamily homes. We work with investment partners, and at the same time, we also educate people on wanting to learn how to invest in real estate just based on a lot of experiences and stuff. So it's been a fun journey, right? There's lots of ups and downs, and that's part of having discussions like this is great, where we can kind of happily share some of that knowledge to others that are looking to kind of dive into this space as well.
No doubt. And we connected without knowing each other. We're in the industry way back like 10 plus years ago, working out of the same gym for the longest time. And then actually kind of reconnected a few years way after that, which was kind of funny and accidentally. Mike, just to speak frankly, before we get into the conversationalist, but actually, we're talking to each other. So I'll just tell you face to face. It makes it a lot easier. The reason I enjoy working and partnering with you is having worked with a variety of other people in our space. I feel like so many people are trying to sell something, and you are too, but in a way that's perhaps not as beneficial to other people. The real estate investing space is crazy for so many reasons. And since this podcast is about real estate and money, it's the perfect conversation to have, which is there's just so much of a stigma around the real estate investing industry, where you've got these courses that lead into other courses that lead into other courses that lead into other courses. And that in itself inherently isn't bad if it's compounding. But it's almost like, hey, we're going to leave this information out, so you have to get the next one. And it was almost like an ongoing joke with people around real estate investing, unless you were in the inner circle. And what's been unique about the information that you provided and just working together, partnering, is that you actually give real, true value. You do the thing that you say that you're going to do, which is pretty key. And genuinely, you're approachable. So thank you for that. Obviously, man, it says a lot about you.
It's a pleasure. Like I said, I agree with you 100%. Like it's, at the end of the day, there's lots of education, lots of learning that's available there for free. There's lots of courses, but it is about finding the right fit, working with the right people that makes the most sense for you. Definitely reach out to other people that have worked with them, work with that individual, that coach in the past, and have taken that course. For me, I'd love to just teach based on my experience. And if they want to work with me, I would be honored to work with them. But again, I never believe in big, hard sales tactics by any means.
Yeah.
It's about giving and giving and giving, exactly what you're doing and what we're doing hopefully today, and just kind of sharing and talking about things to hopefully support individuals. And if they want to kind of work with myself or you, then we would be honored to. But right now, it's just about providing value and at the same time, just giving back a little bit and sharing some of our experiences and knowledge that we've had for years and years to help support them in their journey as they get started or scaling in their business, right?
So I know that in like a big part of the episode today, we're going to talk about what to expect this year, but also what we've seen in the last few months and what you're doing out there. However, it's important to really build upon that and say why are you qualified to talk about that? What are the things that have done to get there? But before I even go there, there's something really important that I like to talk about, and I know our listeners have told me they enjoy talking about, which is just really how someone gets to the point where they understand the mechanics of money and how it impacted them and how they got to this point. I've shared openly in previous episodes about some things that have impacted my life and how my life has changed based on just purely changing my mindset from the scarcity to abundance, but more importantly, how I was raised. So, Mike, was there a point in your life at any point where things changed for you, where you had a certain mindset around money and either negative or positive, where it changed? Something ever happened to you? What are your thoughts there?
I wouldn't say it would have changed, but it's something that I have been enriched, I guess is the best word for my folks. So they're immigrants from Portugal. They literally had nothing, like zero. And they came here and they worked, let me bring blood, their asses off. I'm not sure if I could say asses, but I am. So they worked their asses off to kind of build what they were able to build. They had this very small house. They really started to expand. And at the same time, they just really worked and worked and worked. And for them, they got into real estate very, very early on. So when I was in grade 4, they bought some acreage out here in Langley. So for those that are listening, we're in Langley, BC. And they bought some acreage here. And they retired from that at the age of 50. And that was that was a huge aha moment. They were planning this out, that this was at some point in time was going to be more of a development play. And as kids, so I have 3 brothers, we all watched this, okay? And for my folks, the one thing that really stuck and really were the lessons we learned was how my parents were building a legacy for us. That was really, really what was instilled on us, is when you work really, really hard, teaching your kids, teaching your family in regards to the importance of money and how to manage that appropriately and start to kind of build a plan to help not just support yourself today. And a lot of people in this day and age, it's all about the immediate gratification. That's not what I've been instilled. It's about building that legacy to support my grandkids, my kids, that generational wealth. And at the same time, taking a lot of the skill sets that my folks had taught me when they kind of went to develop their property. And all of us, my entire family are investing in real estate in one form or another. And so that's all been instilled with the same mindset of building that legacy for our family. So it's so much more than just wealth for us, like physical wealth of income. It's what are we doing to help support future generations within our own family base to help them out? And then more importantly is teaching that next generation the importance of money, because I think that's something that is significantly lacking in this day and age. It's just really, really poorly done. No offense to the public school sector, but I do believe it's our responsibility of parents and brothers and sisters to help kind of educate people on the importance and how to properly manage money. So there wasn't one immediate instance. It's something that has been ingrained to us since we were very, very young, is, understand the importance of money is very, very important, and not to overly spend it. We all did, we spent a lot of money on fast food and fast cars and all that stuff. And I'm guilty of that as well. But man, I learned some lessons based on that. It's just like, what a waste of money that really, really was. If I put this into a piece of real estate, that piece of real estate could have bought that same car. To be honest with you. So that's really, again, there wasn't an immediate moment, but it's been something that has just been ingrained to us for most of our lives.
So 22 or 23 years ago, you started your investing journey.
Yes.
Based on what I understand is that your parents kind of helping you, or at least see what was possible out there. How did you get into it?
Yeah, great question. And so for me, one of the important things that we're taught was saving for our house. And so back then, that's what I did, is we saved and saved, we worked. And it was also just taking a certain percentage of your income, starting to park it away. Something I teach my kids as well. Start parking it away as soon as you possibly can. And as you start to kind of build you a little bit of a nest egg, that's when you start to use that for the purposes of purchasing your personal residence if you wanted to buy that for yourself, or investment property. So I was fortunate enough to have enough capital, and it wasn't a lot that time. Again, this is years ago. We bought a townhouse for like about under $100,000, like $70,000. So the down payment of that was like $25,000, $30,000. The good old days, guys, right?
Back in 1971.
Yes, I'm really aging myself. But that was the first aha moment for me. And I share this story a lot in different podcasts and stuff. But I was losing $40 a month on that property. And honestly, there was no Facebook pages, there was no podcasts, there was none of that information. All I knew was based on my books. Buy the property, your tenants are paying it down, giddy up. Okay, perfect. And so losing $40 a month, all in my head is, okay, I'm just don't go for dinner one night a month. That's not a big deal, right? But the aha moment in the investing side and the buy and hold strategy that is my focus was when that property went from a negative cash flowing property to significant positive cash flowing property where there's actually money going into my pocket every single month. And now light bulbs are really coming on. I'm like, wow, this is pretty cool. I don't have to really do much anymore. And the tenants are paying the mortgage down, and I'm getting money every single month. Well, maybe I just need to do a few more of these types of things. And that's kind of where this whole evolution has happened. Like, for me, sitting here with you, doing this podcast, talking about real estate investing was not in my radar 23 years ago. I just wanted to own a few pieces of real estate. That was my vision for myself. And really, again, it's about building that legacy for my family. And so now one of my daughter's got a house. My son's got a house. I bought properties for them many, many years ago. So these are legacy houses that I use. That you can reference as little piggy banks for them whenever they need it. So that was kind of the evolution. That's where it was. And so for me, I've learned by saving a lot of capital right from the very, very beginning, and not eating out at McDonald's or whatever as much. I was able to save up for down payment for my property. And then what happened back in 2001, 2002, the market started to appreciate. Then I really understood the power of appreciation and leverage. And that really started to open up some things drastically. And even my kids, they've all done the same thing. They've all saved enough capital, and now they're looking to acquire their own personal properties as well. So
cool. So your parents taught you specifically about investing in real estate. So they suggested that you buy a real estate investment.
Yeah.
Okay. So that's a key point. Everything there was a lot there to unpack, but that one thing to me is the chain of events, which started the chain of events, which put you closer to where you are today. Obviously you had to follow the path and do the thing. But I think to start off with is most people that I talk to on a regular basis that are looking to get into the market, most of them don't even think about buying real estate as an investment, right? I would say 9 out of 100 people that come talk to me about their first home are not thinking about real estate as an investment. The one person that is, generally speaking, interestingly enough, it does come from a family. Hey, my dad did this, so we're going to buy something together, or that sort of thing. So it's quite clear to me that in general, the information and where you receive it from, especially if it pertains to family, is going to dictate the wealth of your future, like how well you do financially. Yeah. And that's really interesting. So, of course, having platforms like this, people can listen and change their mindset and their approach. It says a lot to me about the information that we teach our kids and how we, educate them in schools and how we talk about money. And that's a whole other conversation.
Yeah.
But that is a massive and really key. So thank you for sharing that. You're welcome. And we're going to fast forward a little bit because, again, we've got a lot to touch on here. Mike, you built a successful coaching company. You also successfully own multiple different investment properties. In fact, you just told me that you recently, I think, put a contract on one just last week. Is that right?
Yeah, we just blocked this up, 20-unit apartment building out in Edmonton. So, yeah.
Okay, 20-unit apartment building in Edmonton, Alberta. There's a lot to look at there. Why 20 units? Why Alberta? Mm-hmm. What was the purpose, and what did you go, or why did you choose this property?
Well, this property has been we've been negotiating for a long time. I really like the property itself. It's very, very well constructed, good location. Units have mostly been renovated, but there is significant upside that's still available in the property. The individual or the company that owns this property right now, they've kind of fallen a little bit behind it. The property's a little bit underwater. They will be losing a little bit of money in here, and again, they're a little bit motivated to sell. They bought it kind of its peak time in Alberta. And so now they got investors and they're wanting to get out and exit, and they've all accepted that this property has a potential loss in this situation. So for us, it's a real easy one because we can take it over, increase a lot of the rents, increase the valuation of this property. So first and foremost, locations, good sized building, good suite mix. There's a lot of 2 bedrooms and single bedrooms in there, mostly 2 bedrooms. So that is our ideal kind of suite mix. And the one thing that we're very fortunate enough is they've done a lot of the renovations. It's just been not properly managed. And this is where our strength is. We can take it over, bring in our management team, and really turn this property around quite significantly. And it's not that it's in bad shape. It's actually in fantastic shape. But it just took a long time to go through the negotiation process in regards to them accepting what is needed to be done, right? And so, I think for a lot of people right now, and I'm sure we'll dig into it a little bit more with the cost of interest rates and everything that's going on. A lot of people use lines of credit to invest in these types of projects, and they've seen their costs have all gone up. And I think in the situation here, this property is not supporting a lot of the expense that is part of this project. And so for us, that's why they're wanting to go. They want to stop the bleeding. And for us, we see this as an opportunity where we can actually make with it.
Okay, so currently cash negative property. These guys have owned it for about, what, 10 years or so, you said?
They've owned it for about 7 years now.
7 years, which is interesting. And they're seeing an opportunity to exit the marketplace because of increase in values in the Alberta real estate, or just generally speaking, the cost of borrowing is too high for them and they're tired of it.
For them, they're just tired of the bleeding. For them, it's costing them way too much money.
Okay.
And that's the biggest issue.
So I've got a few key questions because we're going right away into multifamily conversation.
Right.
But I think the first one is how long ago did you find this property?
Mm-hmm. Yeah, so it was about 4 months ago.
Okay, and when did you start negotiation?
About 3 months ago.
Okay, perfect. So you found it 4 months ago, you started negotiation 3 months ago, and then when did you put it under contract?
A week ago.
Okay, and how long did it take you to do the due diligence, looking at the numbers, inspection?
We're actually still right. We've got the property just under contract. The documents have literally been all fully received as of Friday.
Yeah.
So we're just going through that process right now. So
I think that's a key consideration because, and I know we've skipped forward a little bit into the multifamily space, and perhaps that's part of the conversation because it comes up all the time right now. But just a reminder that, because I do get the occasional question around these types of properties, is like, how long does it actually take to do this? And it can take months, in fact, years sometimes to put these deals together, right?
Yeah, like sometimes you're negotiating for years. It's exactly like you said. Is sometimes the owner is just not ready. There's an expectation of owners that they have a number in their head that they're trying to achieve, but it's not really relevant to what the market value actually is.
Yeah.
And so I use the term, the property needs to marinate for a while is my reference. Is sometimes the owner just needs to get into that mindset to understand that property isn't worth what it's worth. And when the time comes, maybe at that point in time, they'll start to finally reach out and say, okay, yeah, we're ready to go. And that's exactly what happened here. There was a lot of back and forth during the Christmas break. And at the end of the day, we just know what our number is, and that's what it is. And that's important for a lot of people that are listening today. It's just like, when you're in multifamily, know what your number is. It just needs to make fundamental sense. There's no emotion to this. It's all numbers, and it really is a business of numbers. And once you know what your number is, it either works or it doesn't work. And if it doesn't work, then there's other projects out there, or you just need to be patient.
So multifamily or any type of property right now, one of the reasons people aren't buying, or just generally speaking, is interest rates that you just mentioned. There are people bleeding. For anybody on the West Coast in the Vancouver area, you've seen condos with a great sell-off of investment condos happening over the course of the last 6 months. There was a period of time where I was talking to a very prominent local real estate agent who let me know that basically 2 out of every 3 properties he was selling were investment condos, quote unquote. People renting out, their costs were too high and they couldn't keep them because of renters and so forth. So you're buying, maybe not the peak of rates because they've come down a little bit in the last month or so here, but you're still buying at a relatively high interest rate perspective. What makes you confident and comfortable to be able to purchase at this time right now?
Yeah, that's an excellent question. And so, for example, in the multifamily space, and can be a very long discussion, and it's just really understanding how, specifically in multifamily, with a lot of the demand starting to kind of dissipate a little bit in acquiring of residential properties, it's actually increased the demand of rentals. And so rental prices have actually gone up through the roof drastically. So for the properties in Edmonton, for example, a lot of our portfolios had an 18% rent increase this last year, 18%. So a lot of these increases that we've seen in the last year, for the most part, has been kind of a little bit of a wash. It's still quite expensive, but for the most part, we're seeing a lot of these rent increases for the demand that's occurring. So we're seeing a big influx of immigration from different provinces and also immigration, which is also creating a huge influx of demands. And so with that being said, that's where I see a lot of appeal. Now, in some cases, I do. And again, this is Mike Ponte's crystal ball, so take it for what it is. I'm not giving you guys advice on what you should be doing. Is, we kind of are foreseeing that we'll probably see a couple rate drops this coming year in 2024. How much, we don't necessarily know. But our belief is that we've hit kind of its initial peak. So we're taking that into account as part of our analysis as well. But I want to be very, very clear. Our position whenever we acquire properties, we're always making money on the buy from the very, very beginning. And the second part is we're always cash flowing based on current interest rates today. And so with that being said, we like to look for opportunities. We're like, okay, rents are continuing to go up. Do we still forecast that rents are going to continue to go up next year? And in most cases, the answer is yes. Is it going to be 18%? Probably not. We're probably going to see a smaller amount, and we budget for that. But at the same time, we're also assessing, do we think interest rates might go down a little bit? Yes. And then we're starting to build our financing plan as well. So in a lot of cases, when we're acquiring properties in the multifamily, this one is a perfect example, is we might be just doing a 1-year term or a 1.5-year term or 2-year term. We're still to be assessing that. We know we'll probably be paying a little bit more on the financing side right now, but we believe when things start to once we start to raise some of the rents, increase the value of the property, by that time, we're hoping that interest rates come back down. And from that point forward, we'll really be in a very strong position for our asset. So again, just like anything, real estate is an investment. There's risk in every single thing. And it's kind of trying to be a little bit forward looking and building a very clear plan of what you're going to do, and also take into account planning worst case scenarios.
Right.
So that's really, really key. If your worst case scenario is something you can live with and it still will work for you, then maybe proceed accordingly. Obviously get some second bit of advice for those that are relatively new. But that's the way we've always positioned this, is we're always trying to look 2, 3, 4 years ahead and try to kind of assess of what things are going to happen. And at the same time, what's the clear strategy and clear plan for this specific asset.
So speaking openly, a lot of people that I speak to and talk to on a regular basis aren't in the multifamily space quite yet, or they're more, kind of on the edge of getting into the investment space. Maybe they own one, maybe they own two, maybe they got stung in the past or something of that nature. When we talk about buying real estate as an investment right now, first of all, the conversation is not nearly as hot as it was 2 years ago for obvious reason, interest rates, right?
Yeah.
But, you just explained to me how you were patient, you evaluated, the property valuation worked out in your favor, due in part because the other person had pressure because of interest rates, which leads me to ask a few questions. So starting off, the first one is, do you still see more in the residential space, maybe not the multifamily space? Are there still, or are there a lot of opportunities property value wise in the markets for just more, single family or 2 to 4 unit properties that you're seeing out there right now?
Absolutely. And that's the thing, there is opportunities in multitude of different markets, including Vancouver in itself. And again, with a lot of these high interest rates, and I think we were talking about this just before the podcast, is like during times of challenge, like what we're seeing right now, you're seeing challenges here in Vancouver because interest rates have made things very, very unaffordable. Same thing with Toronto. Toronto seems to be taking a bigger kick in the teeth than we're seeing pretty much anywhere around the country. And that was one of the hottest markets. And again, it's become unaffordable. And so with that being said, there's challenging times for a lot of people. And again, it sounds really, really bad. So I don't want it to sound that way, but it's just what it is. But those are really when opportunities become available. And us as investors, we have to look at that and say, listen, they may be taking a huge haircut on that property and that mortgage, but you're also helping them out to get them out of an ugly situation. Sure. So this property that we're buying right now is getting them a little bit of an ugly situation. They want to stop the bleeding. And for a lot of people, it's the same thing. Maybe buying that property at a discounted price, you're making some money out of this, but at the same time, you're preventing them from potentially going to foreclosure in some cases. So these are the times where, as investors, are fantastic in regards to buying great assets at a discounted price. But at the same time, you also got to take into account the due diligence of what's happening in the market. Again, be forward looking. So for Vancouver and Toronto, there's still going to be some challenging times. I'm not going to deny that. There's going to be challenging times. We're still not out of the woods yet. It's going to take some time. Hopefully we'll see a little bit of relief with interest rates. But in other parts of the market, in other parts of the country, they're actually going up. Calgary is actually the hottest market in the country right now. And even with these interest rates, the way they are, prices are appreciating. Edmonton, same thing too. And the biggest stat that I pay attention to is affordability. And that's what's happening right now, is people are moving to places where they're more affordable because they just can't live where they live today. It's just way too expensive. And so you're seeing migration from Vancouver and Toronto moving in mass exodus to the prairie provinces and even Atlantic Canada to be able to afford something a little bit better. And so yeah, is there opportunity? There's opportunities everywhere, and there's always opportunities. But sometimes the opportunities are maybe not in your own backyard, and they're just maybe not as in abundance as they once were before.
Okay, so again, speaking for those primarily on the West Coast,
Sure.
The traditional, at least I'd say for the last 4 or 5 years, what I hear from most people, and this is not my suggestion, but what I hear from people is, hey, I'd like to go buy, a little investment condo or something of that nature. And, obviously, why are you buying an investment condo? What's the location? Are you open to different areas? What's the purpose? But it seems to be that's still the thing that people are looking for.
Sure.
Now, I'm like, to your point, I still think there is opportunity in higher cost areas and locations, whether it be Vancouver or other areas. I'm very strong on different types of properties. Like anything right now for me, that you own the land is really where I'm suggesting people look right now. I guess, first of all, what are your thoughts on that?
Owning land, I
Yeah.
think it's great, to be really honest with you. For the amount of influx, for the amount of homes that are needing to be produced for the migration that we're seeing right now, there's a major push of obviously adding more property to our inventory. And so having land is amazing. Like, especially you have opportunity to do a lot of development in there. So it's becoming a common trend in the real estate investing community as well. Governments are actually starting to support building. So I do anticipate that there's going to be a big push for development. And if you have land and you're in a very good central location, I think it'll pay huge dividends. So
Now, I'm going to throw you on the spot, but I'm going to ask you the question. Do you have any, I know at the start of the year, typically people look through and they say, okay, well, these are some of the cities and areas and locations that I know more on the residential side that are good areas or buys. Do you have any that you're aware of right now?
here in the Lower Mainland, or
Sure,
yeah.
or
So for me,
BC?
to be honest with you, I don't. My strategy mostly is buy and hold existing inventory. That's just our strategy. That's what we have, and I do have specific markets that I like in outside of the BC marketplace, to be honest with you, because I'm a buy and hold investor. I'm not a big fan of the landlord tenancy branch out here in BC, because there's just too much controls that are there. So, but it's not to say that there's no money to be made, especially in the development side. But I think anything outside of Vancouver, to be honest, like you see what's happening here, obviously in Langley, just 45 minutes outside of Vancouver, the amount of development that's occurring, and it goes right back to the very simple principle that I shared earlier, is affordability. Is if it's too expensive to be living in Vancouver, people start to move outside. They don't necessarily want to leave Vancouver. They may want to move to Chilliwack. So Chilliwack would be a hot spot for me. Abbotsford would be a hot spot. Langley would be a hot spot. So in this environment right now, and this is thanks to COVID, people are now much more accepting that you can work from home. So you don't necessarily need to live in Vancouver anymore. You might have to go to the office once or twice a week. So people are starting to kind of migrate outside, and instead of paying $1 million for a condo in Vancouver, why not pay $500,000 for a condo in Chilliwack? So start to pay attention to where that migration trend is. You look at, like I said, Langley, just in our own backyard, the amount of development that's occurring out here is huge. And I would anticipate that that's going to continue on because of all of the infrastructure that's built out here. So for me, Lower Mainland, Langley, Chilliwack, those are two kind of key areas. Mission would be another one as well. Maple Ridge for sure. Those are kind of few key
And what types of
locations.
properties?
Single family would be ideal. So for me, I'm not a big strata investor, to be honest with you. And again, for me as an investor, I like to have as much control as I possibly can. And again, this is just my 2 cents, and this is the way we structure it. Is when you're dealing with kind of stratas, you obviously lose a little bit of control because there could be special assessments, there could be increased in condo fees, and there's not a lot of control because it's based on kind of a voting system as well. Where if you owned a single family property on your own, maybe rented the upstairs and the downstairs, in some cases you can buy side-by-side duplexes or a fourplex. Those would be your best bang for your bucks, especially if you got a nice piece of land that's associated with that as well, because there could be some opportunities for development as well. So.
Definitely. On the money side of things, what I've noticed is that people have been a lot more there's two things. One, they've been more hesitant to use their equity from a line of credit perspective because the cost is high.
Yep.
So in many cases, you're no longer cash positive. But the second side to that is it's generally more challenging for people to qualify with conventional lenders. So we've seen many people have to explore some alternative lending, which isn't significantly higher in cost, but there is some added cost to consider there. And so, for that reason, from an investor perspective, obviously there's a lot less that I've seen on the residential space, especially, juniors or newer people, but we're getting these calls again and we're getting these conversations again. So Do you have any specific suggestions that you're providing people who are kind of newer in the game or just entering, or who have one or two properties, to how they can start to level up? Are you suggesting that they still use their line of credit? How are you suggesting they approach the potential higher costs? What are your suggestions there?
It's a great question. And to be honest with you, as I said earlier, it's all about the numbers at the end of the day. Like if you're using a line of credit to offset, to do your acquisition, that should be built into your analysis. And then at the end of it, once you start to plug in those numbers, does it make sense? Yes or no? And if the numbers, if all of a sudden you plug in those numbers and you're losing $500 a month, $1,000 a month, are you comfortable with that? And the answer could still be yes. It's just that, because the opportunity is still so significant there, but it isn't something of an acceptance that you have to really understand. Guys that are listening to this, it is always about the numbers. So, you can use your line of credit. Even myself, I still use line of credits for investments. But for me, I like a lot of my investments to pay for itself. I don't want my investments to be taking money out of my pocket every single month unless the project really does make sense. And so that's the $1 million question. And if you can't find projects that justify that, maybe it's a different area, maybe it's a different strategy in itself that you have to look at. Maybe you shouldn't be using your line of credit. Maybe you're partnering with people. And I think we've talked about this before in previous podcasts is, for investors, for anybody that's looking to scale their business, at some point in time, they're going to run out of money. Yep. And then they'll start to work with individuals that want to invest. They have a bunch of capital, but now they want to invest, but they just don't have a lot of experience. Now you as an investor, you have that experience, but you may have just run out of money. Maybe there's an opportunity to partner together where you can start to scale from that perspective. And that's how we manage our business too.
Are you seeing more of that right now?
Yeah, actually I see a lot of that, because I think for a lot of people, there's a lot of money that's out there because they don't know what to do with it. There's a lot of question marks, they're a little nervous. They don't understand what's kind of happening. They don't know where to park it. So there is a lot of money that's just kind of sitting there. And in a lot of cases, there's a lot of cash sitting there. Don't get me wrong. There's a lot of line of credit that's also sitting out there too. But exactly like you said, it's just the numbers are much more difficult to make sense, which is why there's so much money that's sitting out there. So.
Okay. So we talked in the beginning about 2024 breeding opportunities and still being a good time as an investor to get in, specifically because rates are still high and there still is timidness in the marketplace. So what are some of the things that you're telling your I guess people who are in your courses, or just generally speaking, people you talk to on a regular basis, what should they be doing? Yeah.
So right now, I think the important part is get your feelers out there, build out your investment team as big as you possibly can. And really, it's really about finding those opportunities and taking into account is if the market, let's say, for example, if you're buying in Vancouver, or if you're buying in Toronto, have you budgeted in that there might be some further losses that are going to be happening within the network? How much? We don't necessarily know, but it should be a reasonable cushion. You shouldn't be buying at market, to be very honest, in Vancouver and Toronto. And this is me talking, to be very, very clear, but there's no way I would be, is if there's anticipation that there's going to be a lot of inventory coming in the spring, which is kind of what I'm making an assumption is probably going to happen, that there might be some further price reductions, but that can also provide huge opportunity as well. And so with that being said, have you built a little bit of a cushion in your acquisition to making sure if the market takes another drop of 5, 6, 7, 10 points, that you'll be able to sustain that? And I think that's really, really important. So, and that goes with every market, to be very frank. I'm saying the same thing in Calgary and Edmonton. We shouldn't be budgeting for future appreciation. We should be budgeting, does the numbers make sense based on today? And am I buying this with a little bit of a cushion to protect myself, just in case things start to kind of go a little bit sideways? We're not out of the woods with this whole inflationary pressures, and there's still some job loss that's probably going to be coming as well. Interest rates, there's a lot of assumption that interest rates are going to go down, but what if they don't? But what if they don't? Hopefully they do. I'm assuming they will, but what if they don't? And so, don't speculate. Just make sure you're making the right decision based on how the property is performing today. And there's a saying that is out there that you make your money on the buy when it comes to real estate. And it's something that is absolutely true from based on my years of experience. But during challenging times like we're seeing today in a lot of different markets, you need to be very, very prudent right now. You should know your numbers. If you don't understand numbers, learn how to understand numbers, and at the same time, protect yourself especially in areas of prices are going to go back down.
Okay. So first and foremost, be prepared for market values to shift either up or down, but just be prepared. That's the first big one I heard. Know your numbers was the second one that you've repeated many times. So that's obviously a big one, guys. Listen to that. Anything else? Any other big opportunities that you're seeing in the 2024 market? Either property type, location, finance wise? Anything else that you say that you think people should think about? Or?
Yeah, like I think for everybody, I think every market, I think in different multitude of different segments, they're going to do very, very well. Like I think single family will do well because I think there's a major demand for people wanting to get into residential. They don't want to be renters anymore. So we'll see what happens with interest rates. If interest rates go down a couple points, I think that will be just enough to do a big push of people wanting to jump back into the marketplace. Yep. So I think in the single family space, in specific markets, you will see a real big push of appreciation in several different markets. In some cases, maybe the decline won't be as bad as in some of the other markets as well. So I think single family is a very solid strategy. I'm not knocking it. I think multifamily is also going to be a very strong strategy as well, because there's still going to be high demand for rent for 2024. So, a lot of the rent increases, we haven't seen rent increases like 2023. We haven't seen rent increases like that ever. And 2024, my prediction is that it may not be to the same levels what we saw in 2023, but I still believe there's going to be really, really high rental rates. And I think there'll be higher increases and there'll be very little inventory that's going to be available. So I think in the single family space, single family homes are great. Love the multifamily space right now. It's very, very strong. And last but not least, if you can get into land development and you understand that part of the business, I think it's a very strong strategy because there's a lot of development that's going to be coming in the very near future. So
your program that you have a few different programs. Are you seeing more interest lately? It seems like there's been more conversations. What's that been like for you?
Yeah, it's been pretty strong to be honest. I think there was a little bit of a lot of question marks earlier or in the middle of last year, just because they didn't necessarily know what they're doing. But it's interesting. I'm seeing a lot of people that are seeing kind of what we're seeing. They're wanting to get into this in the real estate market. They believe 2024 is going to be a strong year. So I'm seeing a lot of newbies and new people that are getting interested in real estate. They see opportunities. They believe that there's opportunities. So we're seeing a lot of people kind of going into the real estate investing 101 program. So for us, so it's just understanding the fundamentals. So it's like we talked about before. How do you understand your numbers? Do you understand your numbers? Do you know what type of property you should be focusing on? We talk about market due diligence. So we talk about, is Vancouver the right market? Is it Calgary? Is it Moncton, New Brunswick, right? So how do you determine which market to be parking? And at the same time, what investment strategy is the right one?
Last question for you on that point is, I'm really curious, generally speaking, demographically, what are you mostly seeing as far as the demographics of the type of people who are reaching out to sign up for these programs?
That's a great question.
Age or background or anything like that? Is there a commonality?
There is, actually. It's kind of interesting you brought that question up. But for people that are just getting started, that age is between 25 and it's getting lower every single year. So good for you guys that are just kind of looking at this and considering this. But it's starting at around 25 to 35. They're just getting themselves kind of settled in. And as they start to grow their portfolio, then it starts to kind of get a little bit older. But that in the real estate world, the average we're seeing is between 25 to up to around 55 years old. Right now, the demographic is mostly male. Sorry, I shouldn't say mostly male, but a higher percentage male. So it's probably like 55% male, 45% female. It doesn't really matter, but that's just what we're seeing just in general terms. But it's interesting to see a younger generation starting to get into the real estate. So
younger generation, have you seen an increase or decrease of women getting involved in the last couple of years?
Increase for sure.
Awesome.
Yeah, increase. And it's great to see. It really, really is. It's amazing. And there's some really sophisticated female investors out there just absolutely killing it out there.
Cool, man. Yeah. A lot of good stuff today. Really appreciate it, man. We're gonna cap it because there's so much more we could talk about, and this gives me an excuse to bug you and steal a little bit, like another half hour of your time in the future, of course, so you can come by and say hi to Chewy, who's
always
licking his tail. Oh my gosh. In any case, appreciate you coming down, brother.
Pleasure.
Thank you so much, Mike. We're of course gonna leave all the information in the show notes so you guys can check out everything that Mike's got going on. Definitely reach out, check out his programs, follow his Facebook page, look at his YouTube account. And he's got a podcast launching very soon. So when that pops up, we'll make sure to send that out there too. Thanks again, Mike.
Thank you. Cheers.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.